Hi, Steve Harrison here. Have you ever been afraid of getting audited by the IRS? Have you ever been paying your taxes and thought, man, I'm just paying way too much. This isn't fair. You know, what goes on behind the curtain? Well, with me actually is a former IRS agent who's written a provocative new book called Agents of Deceit, in which he talks about the chaotic and dysfunctional world of the IRS. Richard Green, welcome.
Glad to be here, Steve.
You know, I think a fear that everybody has is of getting audited. Mm-hmm. Is there anything people can do to reduce their odds of getting audited?
Yes. One thing to keep in mind is that less than 1% of everybody are audited. So it's not likely to happen. But what you can do is you can use the approach the IRS does when they select returns for auditing. Everything goes into the computer, everybody's returns, and the computer assigns it a numerical score called the DIF score, Differential Income Function, Discriminant Income Function. And what that does, it compares the interrelationships of your return with those of other returns. So if you're showing a income of $100,000 a year, but you're claiming $50,000 a year for charitable contributions, that's highly abnormal, and so you would be assigned a score. Well, about 10 or 15 years ago, TurboTax and some of the other software companies got smart, and they filed Freedom of Information Acts to get anonymized data that allowed them to analyze the DIF on an anonymous basis. And so they built that into the software. So if you do your return preparing using TurboTax or some of the other major ones, it will actually assign you a probable DIF score, and it will red flag the items that are unusual.
Fascinating. And now, are there people talk about sometimes people who have businesses and they're really, really savvy? And that, you know, it's been said that I think, you know, Robert Kiyosaki, who wrote the book called Rich Dad, Poor Dad, you know, he has a line, I think, somewhere I read where he says, well, the rich really don't pay taxes very much. We hear about loopholes. In your time as an agent, did you see people who were really smart, savvy, and legal about dramatically cutting their taxes?
Well, I did make a couple of fraud referrals, so yes, there were tax fraud I came across, but much less than I had anticipated when I joined. But the one thing that really did outrage me, I worked in West LA, so we had a lot of celebrity and wealthy not clients, we're supposed to call them customers.
Which you in your book say is kind of ironic to call these people customers, right?
And two things outraged me. One thing, I mean, it's a given in our society that if you have enough money and can hire good enough lawyers, you have a tremendous benefit, whether it's trying to get your kid into Yale or trying to get reduced time for a crime, anything. The ability to buy a lawyer shifts the game. The other thing that took me a while to realize is that the people that hire their own tax lawyers, you know, they have a tax lawyer working for them, get a better deal because the tax lawyer is willing to take the time to negotiate, and so they get a better deal. But the third thing, which is really a secret and took me a while to realize, is the IRS unilaterally has the power to prohibit people, attorneys, tax preparers, CPAs, they can unilaterally bar people from practicing for them. And that's not a question of they've been disbarred or disciplined by the CPA thing. If the IRS feels that a particular preparer is really pushing things and has a lot of suspicious clients, they can just bar his practice.
Wow.
Well, how much empathy are you going to get if you go to H&R Block, pay them $200 to do your return? How assertive will they be against the IRS?
Mm.
Now, if you have your own lawyer that you're paying $200,000 a year, they do have to weigh the possibility of being dissed by the IRS compared to them retaining their job.
Sure.
And so they're willing to push the envelope more. And that's not a matter of being illegal. Mm-hmm. It's just, would you rather have a preparer who's really concerned about keeping his practice before the IRS, and you're just paying him $200? He's not going to jeopardize it for $200.
Right.
For $200,000, it'd be a different story, maybe.
So, if you were giving a business owner advice on how to reduce their taxes and maybe avoid an audit, what other than getting a good accountant, what would you suggest?
Well, I think one of the mistakes people make, and it is because of the fear of an audit, is that many times they tend to be conservative with what they can claim. It's like they have this big fear of being audited, and even if they feel that a deduction is justified, they'll say, well, but it'll trigger me for an audit. That was the case with small businesses and home offices. There was a period of time 15 years ago when the IRS really came down hard on people that claimed home office deduction. Mm-hmm. And many accountants would just advise their clients not to even take it, even if you're entitled to it, because it may trigger an audit, which will cost you more in my fees,
right,
than what you'll save as a home office deduction.
Interesting. But you're saying that maybe don't be too scared of it as long as it's legitimate.
Right. It's like when you go out to drive, you have to keep it in the back of your mind. There's always a chance you'll be in an accident and die.
Yeah.
But you don't let that
prevent you from going out and having a good time.
Right. Mm-hmm.
Right. Interesting. Now, you mentioned when we were talking, I asked you, I said, you were a former IRS agent, right? You said yes for 5 years, and then you said, and I think you said something effective. You couldn't take it anymore.
Right.
What couldn't you take?
It was so political as far as getting promotions, keeping your manager happy, and so forth. And so I never liked the politics of things. But what really outraged me were these games that you played with taxpayers that we had exercises and training called putting the taxpayer at ease. And we'd have role-playing games and so forth. And the whole point of it was manipulating the taxpayer's feelings. In other words, we want the taxpayer, when he first hears from us, we want him to just freak out. He's getting audited. My God, what's next? And so the whole point is that when I actually come into your office, you have this big expectation as to what's going to happen to you. But then you see I'm a nice guy, I'm folksy. If I see some pictures of your family, I'll remark on it. And so you become so relieved that I'm somewhat of a sympathetic human being that if you are doing something shaky, you're going to come clean about it. He'll treat me fair. Sure. He understands. Sure. So maybe I should tell him about the $20,000 I didn't report.
And why did that bother you? If they were doing something shaky, what's wrong with having the people creating an atmosphere where they're more willing to admit it?
Well, I guess it goes to a philosophic differences. I just prefer dealing with people open-handed on an equal basis. Just the idea of where you're taught, we all manipulate each other to some extent, but where you have formal procedures and training policies to manipulate.
Okay, got it.
American citizens, it really bothered me.
Well, yeah, makes sense. And so what kind of work did you do after that?
Well, after I went to the LA Times and blew the whistle on ethnic targeting, they started harassing me tremendously, and they eventually fired me. But I was able to retain a very good lawyer, and basically I continued to get my salary.
Yeah, because you said you sued the IRS. What did you sue them for?
Well, it's actually it's a very complicated procedure. I sued for, I got workers' comp because of the distress they caused me. And I have to see a shrink. I mean, I really paid a high price for it.
Wow.
And they fought it tooth and nail, but I eventually won.
Wow. Well, and I know, right now as we film this, we have a president who, I guess, compared to other candidates in the past, other presidents did not submit his tax return.
Right.
And people are talking about, well, will Congress be able to, people in Congress who are investigating, will they be able to get the tax return? What might the tax return say? Obviously, you have no idea. You have no crystal ball. We're not here to get your political viewpoints or anything. But given how you know the machine works, doesn't work, can be manipulated, for fun, what's your prediction of what's going to happen? Are there going to be people in Congress that get his tax return? And if you could look at it, are people going to be shocked by how little he pays because he's got all these fancy lawyers or not? What's your guess? I know it's just a complete guess.
Well, in the first place, any stonewalling raises my suspicions. If a taxpayer says, gee, I can't find my receipts, and every time we remind him, well, he'll get them next time, well, then that means you better see his receipts or disallow everything. Every president, since I think Richard Nixon has released their returns, my guess is that Mueller has them. I mean, they're very simple. There's a mechanically, it's very easy to get returns. It's easy to get a printout. And so my guess is that Mueller has them. Now, whether the full report indicates that or not, but to be a political prognosticator, I think eventually the tax returns are going to come out.
And you think people will be very surprised because he gets audited, right? He hasn't been allowed. I mean, whatever he's been doing, he's been. But would you think that people, at least, might be shocked by how little he pays, given what he makes? Or
and then he's added a further complication because he really built up the fact that he's a multi-billionaire. And in fact, I read several years ago, Forbes publishes their list of the 100 wealthiest people. And he was on the list, but he called up the editor and demanded that he be placed higher on it. He's got more billions than what they reported. So I think that's what worries him, is just the fact that he might not be as wealthy as he let on.
Interesting.
Now, whether or not he did, I wouldn't even hypothesize whether he's done anything illegal or not. He's had bevies of tax attorneys. So unless one of them is willing to testify that they ran it past him or not. Well, keep in mind that out of all the hundreds of millions of tax returns every year, only 200 to 2,000 people are prosecuted for tax fraud, that means it's very, very difficult to. The complexity of the tax code is a number one defense. Hey, I didn't know it was illegal to do this, and even a tax lawyer can use that as an excuse. So I think it would be a very big stretch to say that ultimately he'll be convicted of tax fraud. Mm-hmm. Now, in the past 10 years, they've really been aggressive about money laundering. The IRS, through FinCEN, are you familiar with the term?
A little bit, yeah.
Financial Crimes Enforcement Network. They essentially track every financial transaction. They can't track cash yet. If I give you $20, they can't track that. But if you go and deposit that into your account and you don't declare it as income or whatever, fine sign would be aware of it. Now, that probably wouldn't be enough to trigger an audit, but it is a little bit scary, is that financial crimes now are really almost all enveloping. Almost anybody can be accused of a tax crime.
Because everything can be tracked?
Financial crime.
Because everything can be tracked so much?
Yeah.
Fascinating.
And the reason for that is, you know about CTRs, don't you?
Not really. I don't think so.
Okay. Cash transaction report.
Okay.
If you do a cash transaction of $10,000 or more dollars with a bank or a casino, anybody that handles money, they have to file a report with FinCEN. Well, several years after that passed, they made it a crime to structure a financial transaction to avoid CTRs. What that means, going back to the $20 analogy, if I give you $20, they could claim that we have some sort of a conspiracy where I'll pay you in $20 increments so that there will never be a CTR to the IRS. Well, they don't have the prosecutorial resources to go after everybody that uses cash, but essentially now any cash transaction could be construed as an attempt to evade CTR requirements.
Fascinating. So let me ask you this. If you were, let's say you decided you wanted to take piano lessons, and the piano teacher came over and he said, yeah, absolutely, I charge $40 an hour or something, and you felt like that was reasonable, and just said, but, and they just said, can you just pay me in cash? What would you say?
From the standpoint of an IRS auditor or
just
a citizen? I'd say sure. Maybe she doesn't have a bank account or something.
Okay. But as an auditor, you say she better have receipts of what she's collected.
Right. The IRS lives in fear that someplace there's unrecorded cash transactions taking place.
Interesting.
And the suspicion feeds on itself.
Fascinating. Wow, you've taken us inside the world of the IRS, and we've covered a lot of great topics today. You have a tremendous breadth of knowledge and a real incredible life story. So thanks for being here.
Well, I really enjoyed talking to you, Steve.